Welcome to our conversations on best practices for growth at your financial institution. Delighted to be joined today by Chad Roche, who's the AVP Sales and Marketing and Member Service at First Community Credit Union. Hey, Chad.
Hey, Carl, how's it going?
Good. So, for those of you who are new to this, Alpharank optimizes your online branch. Our clients increase funded loans and deposits by at least 50% in the first 6 months without spending an extra cent on marketing. The gains come from higher intent clicks, a more efficient journey, and prospects with a higher book to look ratio. For any marketing campaign, targeted email, a postcard with a QR code, or a Google ad will tell you exactly how many dollars were booked from those clicks, and most importantly, how to get more dollars from that channel. Our insights come from a model trained on 7.5 billion first-party data points from 200 plus financial institutions. The model gives you recommendations to improve intent, reduce abandonment, and maximize click quality. As a thank you for attending, everyone in the audience can get a free 1 month subscription to Alpharank. To see how this works with your own data, visit us at alpharank.ai. Welcome to the audience. We want your participation and your questions. We'll have you in listen-only mode at first. You can send in questions through the Zoom Q&A panel. When we get to the Q&A, we'll unmute your line, let you ask the question live, have a joint interaction, or if you're super shy, we'll just read it out for you. Everyone will get a follow-up email with links to recording and other information from today's discussion. Now, let's get into the fun stuff. Chad, welcome to the show.
Thank you, sir. Excited to be here.
Fantastic. So, Chad, you come from a fast-paced e-commerce background, came into the credit union industry, uh, tasked with a focus to bring in the direct response marketing and essentially, prove that a community credit union can drive high intent users into a funnel and convert. Um, so big task. But before we get into that, tell us a little bit about your background, about your e-commerce background, especially because you were at one of my all-time favorite companies, Ecolab.
Yeah. So, for those watching, I don't come from a credit union background. I've been a credit union member my whole life since I was a little kid. And I was military, so I've belonged to the biggest credit union in the country, Navy Federal, obviously, for most of my life. And so I believe in the credit union mission. So working for a credit union is pretty easy. Um, but yeah, I got my start. And so you mentioned Ecolab. I was at Ecolab a long time ago. It's been, gosh, 15 to 16 years. But it was a great experience because Ecolab is they'll tell you first and foremost they're a sales company. They are sales and marketing. They water treatment is their gig. And as we've talked about before, selling a product that goes down the drain is it's pretty fun. And I don't want to say easy because it wasn't easy, but
But you always
uh,
need more.
exactly. And if you're this commission salesperson and they keep calling and keep dumping it down the drain, I mean, hey. But Ecolab is a very intentional company. They are very, very, very intentional about what they do. And so when I was a territory manager back in the day, um, I got an opportunity to work on a Lean and Six Sigma project with black belts and things like that as just a contributor, and it lit a fire under me to say, hey, this is some cool stuff, and how it applied to sales and marketing and business development and things like that, and just doing better, and not just as necessarily understanding, like the Toyota production system, how a widget is made better or a vehicle is made better, your typical assembly line, but understanding how we can use it in information, we can use it in sales and business in different ways. Um, yeah, but it basically taught me the process of constantly asking why. Why is something working? Why isn't something working? Why did XYZ end up with ABC? It's really simple. And it helps that I love data. I love business. I love numbers to the extent that I really stink at arithmetic. And in my in my business
We,
school,
we, we have we have tools for that. We have tools for that.
exactly.
So
But
so here you are. You're coming from an e-commerce background. Lot of focus on data. You want to drive deposits because you have a special theory about deposits, which we'll talk about later. But you're facing a common credit union roadblock. You expect to have a certain tools and a certain level of visibility, the same thing you might get in a traditional e-commerce situation. But at credit union, you come in, you got a complete lack of visibility into the funnel. So
yeah,
that makes it impossible to pinpoint the source of growth. Now, we got lucky that your CEO, Jack Gill, had heard of Alpharank, and he told you to check us out. So tell us a little bit about how that went down.
Yeah, I mean, the gist of it is we weren't looking for prettier reports. We were looking for, usable data, right? Better
Hmm.
business answers and actionable data. And so, yeah, and Jack always asked the question, since I've been in this company with sales and marketing, is not just why something isn't working, but why something is working. Because
Hmm.
and that's a logical question, right? Is if something is working, we want to pour more into it, or do we want to pour more into it, or whatever it is. Take pieces of that. Let's say it's a Google ad campaign or something like that. Well, what's working in that particular campaign? Is it the CTAs? Is it the graphic? What is it that's working? And try to do more of it, right? And we had a lack of attribution, right? There was really no answer. Nobody really knew the answer to saying, well, why was something working? If we had a spike in checking accounts for that particular month, what caused it? Why was it? And a lot of it was just guessing, and saying, well, we don't really know. We think this did it. We think that did it. And that was before my time overseeing marketing. But again, I'm very data driven, so it was much for me. It was a well, we got to figure out like this is 2026. There's or 2025, I think at the time. That there is no
We have tools for that.
yeah. It wasn't a question of if these things could be measured. It was just how do we measure these things? And we know they can be. We know we're not the only industry or business asking this question. We know that we're not the only ones feeling, as a smaller community credit union, feeling the push from the massive marketing and budgets and abilities of the fintechs that are out there, or even just gigantic banks that we can't compete on certain levels, right? We're just not able to spend $10 million on a campaign. So we have to do better with what we've got. And I believe we'd heard about you guys or interacted with you all at Jack Henry Connect. We're a Jack Henry customer as well, and which was great. We use MeridianLink as our LOS, and which was kind of a match made in heaven. And it's been great. I mean, the amount of information we get for me specifically as a marketer is to say I have the answer. It's well, why is that Google campaign working? What is it doing? What's my return on ad spend? And your team is phenomenal to work with. This is not a just a plug for the sake of plugs. A few weeks back, I was sending an email on a Sunday evening because I was just trying to do something for Monday, and Mitchell was replying to me, and I knew he would. Even though I wasn't expecting it, I knew he would. And that kind of response is helpful, right? Because
Hmm.
there's often I get a lot of questions from my CEO to whom I report directly, saying, "Okay, well, the dashboard says X, Y, and Z. Well, why does it say that? What's going on?" And so there's a lot of questions to keep digging and digging and digging into. The whys behind it, right? Because that's one of the basic lean tools is the 5 whys, and just putting it to action. Yeah. So
Hmm. Hmm.
yeah, that was a big deal.
So at the first level, if I can summarize, it basically allows you to answer your CEO's question, Jack, what's working? Why is it working? If it's not working, what do we need to do to make it work, or maybe move on to a different tactic?
Yeah, and it wasn't just the analytical side of things. It's the customer journey through our application, right? That's very important. Is seeing how where they're clicking, how they're clicking, what pain points are there, and these are some things that revealed for us some significant pain points when you're watching the customer journey through an application phase in MeridianLink, and you're seeing that, hey, there's a real strong bottleneck, in this particular point. Why is that? What's happening there? And leaning into your guys' expertise and your staff and saying, hey, how can we fix that? And teaching us things we didn't even know, right? About our own LOS and things like that, saying, hey, you can do these scenarios and things like that, to help. And it helped a lot. I mean, we talk about the strict numbers. Yeah, there's 40% year over year growth in checking accounts. I was looking at the numbers today. I was hoping we hit that record that we break the record that we haven't broken before. But in 2024 and prior, our average month in checking was in the 80 range, right? 80 new accounts per month. And things have changed. We have more branches than we did back then, and more. We call them MRMs, but MSRs, to do the work and to generate. And we're a very outbound focus, right? Our MRMs, member relationship managers is what we call them. They're not the ones doing the processing. Their focus is origination, right?
Hmm.
Their goal is to bring stuff in. And so 80 checking accounts per month was good. I mean, it was for us, that was good. But when we started digging in and getting the data from Alpharank and being able to actually answer the questions to why, we're trending well above 168 is our average right now. And I look at the month right now, we haven't quite finished, and we're pushing 170 again. And so, and I'm confident that, and I told Jack this many times, that as we keep tweaking and keep implementing these changes and making improvements, that 200 or 250 is realistic.
Hmm.
It's not a pipe dream.
Hmm.
And
Hmm.
for us as a 425 million ish credit union for assets, 200 checking accounts, 250 checking accounts a month is significant. Especially because we do a heavy indirect lending, right? We have a massive lending portfolio, and that's our bread and butter. So you can't lend what you don't have. Well, I mean you can, but only to a certain degree. Oh, you can't lend more, really a whole lot more, but um,
Number one rule of banking, deposits, deposits, deposits. No
it
deposits,
is.
no bank, no credit union. It's like It's a Wonderful Life.
Yep. And that's the key, right? And using those to not only drive growth, but to bring down our acquisition costs and to control those kind of costs and our lending. The checking account is the backbone, right? And so as we
Hmm.
grow those, it's really really important. And knowing how we're doing it and what's working, what's not. It's also led in May and I think in June. I'll be able to figure out here soon. We're steadily hitting a 78 to 80% of those checking accounts are new members. They're
Hmm.
100% new to the credit union, which is even more important because we're tapping into obviously a whole new generations, families and things like that. That's
Right.
super
And the
important.
checking the membership to deposit account is just the start of a life cycle relationship. As
Absolutely.
follow with a vehicle loan, a credit card, then maybe 10 years from now they have enough equity they can get them in for a HELOC.
Yep.
Yeah.
And we do and working on some reward programs for that very thing, right? That's what we want. Is we want that the checking account is the sticky, we all know that in this industry, that's the sticky piece. And it grows from there. And if we cater to our checking account members and really get all the information and data as to what brought them in, then again, just keep moving the machine along. It's important. I think it's also important too is the data that we get from Alpharank is important for marketing, but I mean, we were talking in the pre-show with Lisbeth that understanding the sales side of things is important too, right? Understanding that how we use that information and the data in sales enablement or sales activation, right? Is what does that mean for the MSR or the MRM sitting at their desk and they have a list of outbound calls to make, or for us it's our indirect onboarding, right? How are we doing that process? Are we doing it well? And being able to pivot off of marketing campaigns into sales campaigns and doing it and doing the work of bringing people in, welcoming them in, making them feel special, and it's all a big handshake and it's all important to stick together. But um, you know, getting out of the using the data to say, well, or at least be willing to say, yeah, what's worked to this point may not work to the future, especially with how things are changing with AI and with again the fintechs and just the pressure that we're seeing from outside of the industry, within our industry, but outside of our own borders and our own geography. We have to try new things and we have to do new things and we have to be open and willing to ask those questions of and move that, move the cheese as it were, to say, this may have been how we got here, but is this what's going to carry us forward? And
Well, I get a sense of quiet confidence from you, Chad. I mean, you just told us you went from like 80, a month 2 years ago to like 160, 170 now. So, doubled it over just a couple of years. But
yep.
you're talking to your CEO about, look, 200, 250 is entirely attainable. So, of course, he's heard that number. He's not going to unhear it. So, what initiatives do you have under your belt that you're going to bring to bear to deliver that additional growth?
Well, one of the things is utilizing AI. I mean, we use it. I use it all the time to help understand things better. Using the information we've gathered to say, okay, well, my Google PMax campaigns are working very, very well, but understanding, how that dollar is spent and being able to apply it in different ways, or just moving the dollars. And again, the journey maps and that you all provide is really, to me, I think is one of the key steps for us next, right? It's to say, well, these are the pain points, these are the pressure points, so we need to go in and fix these and bring this member in better, right? And to really, I don't know, to me, it's the relationship, right? It's the whole thing of saying, we want to embrace the member, welcome them in. Again, with our huge indirect portfolio, they're coming in. Well, that's important. So that's a focus of ours as well. Is okay, when these indirect members come in, are we welcoming them appropriately? Whether it's through automated means with text welcomes and email campaigns and things like that. And for us, it's a very strong face to face or voice to voice at least welcome for the member to say, hey, welcome to the credit union. Did you even know you're a member of the credit union? Do you even know what that means? And unfortunately, a lot of people don't. So
Hmm.
that's a real big push for us as well, is to say, hey, you got here. What brought you in? Why'd you come to us? And answering that
Hmm.
question as well. And I'm obviously the marketing side of things, using surveys to help with that. And then yeah, I mean, that's to us, that's where our focus is right now. And then really building another piece of the puzzle is the reward referral program to say, again, you have the checking account. What auto loans do you have? Or you have a auto loan? Do you have two? Do you have three? What other friends and family do you have that auto loans and stuff like that? And to really just keep piggybacking off of what we know that works and adding to it. And again, it's our CEO and our board and the rest of the leadership team. We're growth focused. It's a we Jack famously always says that he would hate to come to work every day and just have to do the same thing over and over again. It would just be boring.
Hmm.
And,
Hmm.
and
Hmm.
and so we push and we drive to say,
Yeah.
we challenge ourselves and saying, okay, we've done it really, really good here, but our members love us. Our NPS is upwards of 75, and so our members really like us. So let's do more of that and bring more people in.
Hmm. And if memory serves me right, you are working on a major initiative to strategically leverage the CRM as part of the entire process.
Yep.
From when, that anonymous prospect first clicks your website and then becomes known and gives you their email address, to also the post-application part of the journey. So, okay, I have your application, but now I have to take you through approval. You're approved now to take you through funding,
Yep.
multiple touch points. Tell us a little bit about that.
Yeah. So, and again, the Alpharank software is what even pushes us to ask those questions, right? Because we see the funded percentage of what we're getting in. Well, obviously we want more funded, right? That's the better dollar spent. So using the CRM to say, okay, to automate some of the things when somebody, if there's an abandonment in the middle of the process, hitting them quickly. Text messages. We know
Hmm.
that texts are opened infinitesimally more often than emails are these days. So we're building that campaign to say, can we link Meridian Link to? We use HubSpot for marketing side of things, and we use Synapses from Jack Henry as our core CRM. Um, and creating these links to say, okay, well, this person abandoned. I can automate things in with text, with email, and create a sales event in the core CRM for the relationship manager to start proactively reaching out to these people. Hey, did you have a problem? Was there something that you had a problem? Oh, no. I got a better deal. Oh, did you know we can match it or beat it? What'd you get? And being very proactive instead of just I mean, for me in the past, if you apply for a loan somewhere, you might get a few text messages or something like that to say, hey, did you forget about this or something like that? But then compounding that or adding to that, or multiplying, I guess, would be to say, picking up the phone. And that sometimes that voice to voice, especially in today's world, that's a big deal. And so we're
Hmm.
using, again, Ring Central as our phone system, putting all these things together and being able to tie them together. And that's the next phase of what I'm building, right? So this looking at what we have available to us and trying not to spend any more money, because we have limited budgets. We can only spend so much, and you can't have a $500 acquisition cost and run a profitable business. So we have to control that as well. And
Hmm.
um, that's another thing that I love about your guys' tools is that I can see, my cost per funded, my cost per click. I can see these things very carefully and try to drive those goals as well. So not just doing more, but doing better, right? Being more efficient with what we're doing. And again, if this particular thing is bringing in a solidly funded stream, well, what do we need to do there? And again, I just think I'm huge techie. I love AI. You and I talked about it before that I'm the guy, the big nerd in town. I'm the Trekkie and all that kind of stuff. But at the same time, when I was learning lean and when I implemented lean in Six Sigma in a prior company that I ran, or organization that I ran rather, um, we learned a term called automation. So it's automation with a human touch. And
Hmm.
it's maintaining that human touch as well. And I think it's important, especially for community banks and community credit unions, that we do maintain that human touch. That saying, okay, fintech ABC be able to do all these things faster than us, but when you pick up the phone, you're talking to somebody who could be your neighbor that you can see
Hmm.
down at the grocery store. And Jack, our CEO, is he's got a very open door policy that members will walk into our headquarters branch and
Well, look, absolutely. I mean, that's the reason they do, become members with you, because if they wanted a completely sort of, glass screen, never talk to human experience, I mean, to go with Chime, right? That's,
yep.
but it's that human element. So it really falls into three buckets then. Being able to tell the rest of the team, the CEO, the CFO is going to give you the money for these campaigns. The frontline, the people who are frontline members, what's working. The piece you're talking about now, making changes to the journey to just make it less ponderous and faster to just, get you that application. And then this back end stuff to make all of that marketing more effective. That continuous touch, even a human touch, to make sure that you bring them all the way down to the balance sheet.
Yeah, and like I said, with the checking being the sticky piece, I like it back to Ecolab, right? At Ecolab, we leased dishwashers, and
Hmm.
that was not the core product. That was the sticking product, right? That was the product that everybody wanted, or needed rather, and then we provided everything else on top of that. Well, that's what a checking account is too. The challenge is, I mean, let's be honest, checking accounts are kind of boring. We all have them. They all basically do the same things. So
Hmm.
being competitive in that space is another piece of this, and that's where we understand, um, uh, with immediate surveys to abandonments or people who are funded, once they're funded, hey, what worked? Even one or two questions. What was it about the checking account that you liked? Um, uh, Understanding forcing the like I said, with the relationship voice to voice within 72 hours, that you've received at least one or two phone calls, and even if they can't get through, we're leaving voicemails. Hey, welcome. Piggybacking that with the text messages and the emails and all these things, and you know again, learning more and just embracing different, and saying, you know again, I don't want to keep going back to AI, but it's changing how we all do our business, our jobs, right, in our businesses, and really saying, well, what can this tool do for me? And for me,
Hmm.
it's data analytics. I can analyze numbers and data faster than I can, now than ever before. Um,
Hmm.
and then
Yeah.
using that to make it actionable, right, to do something with it.
Hmm. Hmm. So now, you can, uh, go talk to your peers. You can show that your Google ad spend has, a significant and real return on investment. You can lay the ground on how you can improve it further, and you can go make that case to the CFO. For every dollar you spend, we're going to create five, six, seven, $8 in value for the credit unions to got that currency. But tell us a little bit more about these, executive boardroom interactions, because, you can now talk to these folks all the time with numbers at hand, and you
Yeah,
have to fight for your budget every day.
well, um, I think anybody in marketing understands the challenge, right? It's always I don't want to say the redheaded stepchild, but some kind of can be that way. And I'm not, I am literally that person, but um, it's a constant defense, right? It's constant. Hey, because we spend a lot of money. I mean, let's face it. Google ad campaigns and printed campaigns. Forget about those. Stupid expensive, right? And so, but also being business minded to say, well, I want to make sure that what we're doing is right, and that what we're doing is bringing a return. Um, and so, yeah, in the definitely in the executive meetings and discussions of hey, we saw that you spent X thousand dollars last month. Why? What happened? this month was up. Why did this month go up? And say, well, we're actually getting a better click through where things are working better. So we're paying for more clicks, but we actually got, instead of a 3x, we got a 5x or a 6x return on those clicks. And not just, well, I think that's what it is. But like you said, we actually have real actionable numbers. I can come back and say, hey, the ad spend ROI or the click journey or whatever it is, here's where it worked, and this is what we did, and bringing all that together and saying, these are real numbers. This is not just made up stuff. This is not, well, this is my best guess kind of stuff. It's these are real numbers. And again, the CFO is typically the person who's riding the numbers pretty closely and tightly. And I have the joy of a CEO who has an accounting background, so it's definitely there as well. But
Like most, I'd say that is the path to the corner office straight from the CFO's desk, right?
yeah, yeah,
It is
and
it
so
is a numbers business.
I'm sure. I mean, any business is, right, and and again, there's a, I don't sound like a broken record, but there's a finite pool of money. You can only spend so much,
Yeah.
and if I'm going to defend what I'm doing, I have to back it up with real numbers. And
So let's talk
okay,
about that. Let's talk about the finite pool of money and walk the audience a little bit through this process of refining your Google Ads campaigns and getting them to work better over time. Because I think that's what a lot of people are still struggling to get to grips with. How to make this thing like really productive.
yeah. Again, I'm not going to even sugarcoat it. I use AI a lot, right? And taking all the data sources I have, using your guys' dashboard and saying, okay, well, I can see where they're clicking into. I forgot the name of the exact tool, but it's the one that has the, these came in from Yahoo, Bing. It's the newer visualized one. And to
Oh,
see,
for those who are interested in the Alpharank platform, it's called Performance by Source, and it basically lists all
yes,
the external sources and the tactics. So, was it paid? Was it organic? Was it earned like digital banking? And if it was from an external source, for example, was it Bing? Was it ChatGPT? Was it Google? And it gives you basically a measure of the uh, quality of visitor from that source and their intent.
yeah. And so what that did for me recently is, and I mean, in the last 2 weeks is we tried out there's a new agency we're working with to do some stuff for us, email mail campaigns, and looking at that alone, it showed that I only brought in like 7 or 8 accounts from that particular source. So for me, that's a red flag, right? Okay, well, why did we bring in so few? I mean, I'm spending a fortune. Why did I bring in so few? And drilling and drilling and drilling, and that gave me the ability to go to that vendor and say, "Hey, we need to pivot. This is not working."
Hmm.
And if there's any hope of continuing this relationship, which they want, um, here's the data I have. This is what it's showing me. What do you have? We need to work together and pivot this to drive this number where it needs to go. Because if I'm only getting 6 or 7 funded accounts, whether it's deposit account or a loan, out of this particular source that I'm spending, $10,000 a month on or $8,000 a month, that's not worth it. I'm not going to continue
Hmm.
doing that. That's silly. And so I'm not sure if that answers your question, but yeah, that kind of
Well, a little bit of accountability goes a long way because,
yeah,
you know,
absolutely. And I just, it's the history of this side of things is I hate to call them the vanity metrics because it's not that they're not valuable to some degree, but
hmm
they're kind of just vanity, right? The number of impressions and things like that. Okay, great, cool. Well, I can understand why the CEOs, the CFOs, that executive is saying, great, cool. 300,000 people saw that ad. So what? What did it
Uh-huh.
do? And
Right. That's
getting
the perennial
getting
the
beyond,
perennial question. Perennial
exactly,
question.
and getting beyond those vanity metrics and saying, okay, those can be indicators and those can be a little bit of a guide, somewhat, but I don't care if 5 people saw it. If all 5 of them got $100,000 in business from me, fantastic. Then that 5 is worth more than the 30,000 who did nothing, right?
Hmm.
And so, and that's where using that to basically come up with those exact kind of answers. That I may have a lower impression, I may have a lower click through rate, but if I'm getting a higher funded rate out of those, okay, so
Yeah,
what?
you find your audience, you find your people. So this
Exactly.
is fantastic. We're at the bottom of the hour, so I'm going to throw it open for questions. Elizabeth, what do we have on the Q&A side?
Yes, hi. Thank you for that engaging discussion. I'm going to allow Kevin George here to talk, who has raised his hand to kick us off. So Kevin, I have just unmuted you and feel free to ask your question here, please.
Hello, can you hear me?
Yes, we
Yes.
can. Kevin, welcome.
Yeah, thanks. So I know you mentioned you have indirect lending going on too. How many new checking accounts did you get because of indirect lending?
Oh, that's a great question. When we first started even asking that question, it was about a 3%, 4% conversion. We're not nearly where I would like to be. The goal I've set is 25%, which is that's a stretch goal. I'm not saying it's not. But last I checked, I haven't run the numbers for June yet, but last I checked, we were in the 8 to 10% range. And that is because we are bringing those members in, that we have set the 72-hour requirement that the relationship managers have to reach out within 72 hours. We're improving on that, like I said, with HubSpot and texting these people with, almost instantly saying, hey, you finished the application, you're funded, got it, boom, I'm going to text you with a survey, what worked, what didn't work. Hey, did you know X, Y, and Z, and things like that. So it's really that hand holding. And when those members come in, and we're in the Wisconsin Illinois state line area, and between the two states, our network of solid dealer relationships, there's over 100. And
Yeah.
and then taking that data, the same thing, and then helping my VP of lending, saying, hey, here's the dealers that are doing really really well, and here's the dealers that aren't doing so well, and so then he can tweak those relationships and things as well.
Yeah, my question is more like the account when you open these checking accounts. I mean, we did some campaigns in the past where you get people open up checking accounts so you're getting something in return, but they don't become our credit union doesn't become their primary bank. So they may open up an account for $5, and we never are getting any other money in it aside from there. How are you opening up accounts where people are now using your credit union as their primary financial institution?
Yeah, that was the 8 to 10% number that I was talking about. Yeah, those
Okay,
those are, yep. Yep. So, and like you were saying, Kevin, we basically dismiss the $5, the savings account or the share account holder, or the person who opens a checking account and never does direct deposit or never does any transactions. That's more of a cost than anything.
right.
Yeah, no, that's that 8 to 10%, and it's just building that relationship process from the moment they click apply, or the F&I manager sends us their application. We start the communication process and trying to stay in touch with them as best we can.
So when you say you bring in these checking accounts every month, and my last question, you bring these checking accounts every month. How much are your deposits growing monthly? You mentioned the monthly checking accounts are opening, but how much on average is overall deposits growing monthly?
Without digging through my emails, Jack, my CEO sent me an email the other day that oh goodness gracious, it was in our board report from the end of last month, or last week rather, for June, and it was, I can't give you the exact number, but I can see the trend line in my head. There has been definitely an increase in the deposit values. I mean, I can look at right now, the screen I have up on my right, that this month we have a new checking product that we launched, and it's got $90,000 in out of 32 checking accounts right now, that's pretty good. And so just using that kind of stuff, but we have seen a definite increase of the value of the account as well. It absolutely happens. Another way we do that is we have a partnership that we sponsor a local minor league baseball team, that those particular debit cards have been a pretty big driver in generating new accounts and incentivizing people to use the account, right? We do a get paid 2 days early kind of deal, but you have to have 25 transactions to be able to qualify. So that's one of the things that we do.
Right. All right, Chad, thank you.
Yeah, thanks.
Thank you, Kevin. Elizabeth,
Yes.
what else do we have?
We have some more in the Q&A, and please, anyone else, raise your hand if you'd like to talk as well. So this one, Chad, you mentioned in your digital campaigns are hitting this massive ROI up to 2,200% in some cases. So when you do take that data to the board to justify cutting the more traditional media like billboards or mailers, which financial institutions do a lot, do you face any internal resistance from kind of the old school stakeholders? And if so, how do you handle it, this digital shift?
Yeah. Yes. And I think anybody would commiserate that you drop a number like that as the person who runs marketing and sales and say we've had a 22% ROAS or return on ad spend. Most people start looking at you like, what? But again, we can justify it. So is there some pushback? Yes, but it's also educating them and saying we can't turn off the traditional channels because that's top of mind. That's brand awareness kind of thing, and we still need that. Um, but we can use it in better ways, and saying, well, maybe we don't need to spend as much on particular billboards. We can, and I've done this. I can look at different transit routes between two cities that we have branches in, and saying, well, there's some pretty cheap boards out there. What can I use out there? And instead of going for the ones that the companies that own the boards are trying to say, hey, this one gets 1 billion impressions a day. Okay, great, but there's 4 over there that get 30,000 impressions, and those are actually better for me, because I'm seeing all the data on the digital side, and I can figure out, okay, well, for example, my CEO asked me this question 2 weeks ago. Is there a way to figure out exactly which person came in from which campaign? And the answer is yes. And we can get the application number from MeridianLink via Alpharank and match it to a campaign 1-to-1. And so now I can take the addresses and the demographic information from those people and say, I wonder if I did a mailer in this area, or if I did a billboard in this area, because it's generally over 50, and which I'm almost there. So, generally over 50 years old, that, maybe a little bit more traditional out of home advertising is going to be more important, or more effective rather. Again, being in the Illinois, Wisconsin state line area, sports are a big deal. We got the Brewers, the White Sox, the Cubs, the Packers, the Bears. I mean, we have a lot of sports teams in this area. And that's led me to do another thing with ESPN, saying, okay, well, out of home stuff is working in these areas, but let's face it, I mean, that kind of stuff is really expensive, and mailers aren't getting any cheaper, right? It's really expensive. And we have said, Jack has said, we don't want to focus specifically and exclusively rather on the digital branch, as it were. But if it's driving the best return on ad spend and we're getting good, solid, funded accounts out of it, then that's kind of where we're going to focus on things. But we still do a decent amount of both.
Yeah, and it's working. I looked up your numbers to answer Kevin's question. So looking at your 5,300, Chad, you had a 11% increase in deposits year on year, end of March 2026 to March 2025. So they're publicly available data, so anybody can look it up.
Yep.
But that's 11% growth, especially in this economy, in deposits. Fantastic.
I mean, and it's a little bit, you say a little confidence, a little bragging rights on your guys' tool when it says, the industry grew at 0% and we show a 7%. We're like, oh, okay, we're still, it's working.
Yeah. I mean, the reality is just really tough out there for the average credit union. With that, we have another question, Elizabeth.
Yes, we do here. So, Jorge, I'm going to unmute you and allow you to talk. So, you are now unmuted if you'd like to ask your question here to Chad live.
Thank you. Yeah, my question was related to other special offers assigned to the account opening, like, $100 after 30 days. Do you run multiple campaigns and measure which is more effective? How does that all work?
Yeah, I mean, we obviously we have to do to that to some degree. The advertiser or the agency that I use that I was talking about earlier that isn't really delivering that big of a return, that particular campaign does have a $250 offer that, hey, open any account, bring me any loan for more than, I think the criteria was 12 or 10 or $12,000, and we'll give you $250 just for the fun of it. And that's actually not working so hot. I would think it would, right? The knee-jerk reaction for everybody is to say, yeah, it is. But for us, the most effective things that we're doing is the community-based stuff, which is actually causing me to pivot one of our taglines. That when I see that my ads that focus on, or whether it's Meta or Google or whatever it is, that are when we are out, we do a fire truck pull, right, every year with our hospice, our Beloit, here in Wisconsin. Our hospital system has a hospice system, and we do a truck pull with them. Well, those simple pictures and just talking about it, those are driving pretty decent returns. So I don't know that we'll stop doing it because it is effective on certain areas, but yeah, I mean, the checking account, we launched a new type of checking account about a month ago, and it's designed for 50 plus, and it's a legacy account is what we call it. And with that, the offer was, once you open an account and it's in good standing, we give you a 25 basis point bump on your next CD, right? Well, it's driving deposits and deposits, right? And so I wish I could take credit for it. That wasn't my idea. It was actually our CEO's idea, and it's working. It's working perfectly. So I don't know if that answers your question completely, but that's some of the things that we're doing to that. Those kind of things.
No, that's very helpful. Thank you.
You bet.
Also, a quick pro tip. Any of you out there who are using MeridianLink for account opening, if you have a promo code, you can actually embed that directly into your click to action on the website, and you don't have to have the prospect retype that into MeridianLink, so they can make sure that that they get the offer that they wanted, and that the execution matches the advertising. Elizabeth, we have time for one more question before we have to let Chad go. Can you?
Yeah, so I think Chad, this one's a good one. So coming from kind of a more fast-paced e-commerce background and then into the credit union space, what do you think the single biggest misconception credit unions have about direct response digital marketing? You often post about this on LinkedIn, so I think that would be helpful to share.
I'm trying to remember. I'm trying to remember the LinkedIn articles or the post that I did.
We'll be sure to send the link to your bio in the
Thank you.
post webinar email.
Yeah, I'm actually
And
behind on
everybody
that.
like and subscribe Chad's updates. They're
I need
dynamite.
to actually start doing more, but the number one, the most important thing, to me, I would go back to, and I'm not sure if this was actually in my article or not, but just remembering that they're people, right? And just remembering that this stuff matters, and there is know your customer in a different type of context, right? Obviously, we all know that in the banking context, but really knowing who our members are and meeting them where they are, and like I said, we're pivoting. Our key tagline is "Say yes to less stress," and I'm pivoting that for the into the fall to "Say yes to community," and we're building a whole campaign right now around that, because it works, and that's what our members are telling us that is important to them. We're partnering with the baseball team that we work with, which is huge. It's the Beloit Sky Carp, and we partner with another one out of Rockford, Illinois. But I think it's just being intentional, right? And really, yeah, I'd say being intentional and setting, not just setting goals for the fun of setting goals, but achievable ones, stretch goals that say, hey, like the 250 checking accounts. I'm competitive, right? I was in sales and business development, and I'm competitive. And if somebody says the record was 170, then I want 171. And once I hit 171, I want 175. It's just, and being very intentional and being and knowing that, in business school, one of the first things I was ever taught is that if you're not growing, you're dying.
So true.
And in our industry, money is a tool, and if it's just sitting, it's not doing its job. It's not working. So we got to put it in action.
Fantastic. Well, Chad, on behalf of all the folks that have tuned in for this webinar, you're just like a veritable font of knowledge, a modern day Renaissance man. You got your hands in so many pies. Thank you so much. This has been so engaging. So
I appreciate it.
Thank you, and have a wonderful day.
Thank you.
Take care. Bye-bye.
Bye-bye.